Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited, and here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A counter to the counter bullish harami on Friday. It was once again the market showing that the same very recent support area below between 104.92 and 104.51, which contains both the February and March 2017 lows at the same 104.92 number, is still a significant force. Meanwhile, overhead, we also still have the middle time, currently at 105.99 of the January to May 2021 bearish Andrews pitchfork, backed by the declining short medium moving average, currently at 106.14, and the mid-February to date downtrend, currently 106.32. This declining bearish pressure and stationary support is slowly squishing the market. This may well lead to a volatile period soon, much as toothpaste getting too quickly squished in a tube does. Overall, we still remain in between this declining middle time above and the lower time below, currently 102.28 of this January to May 2021 bearish Andrews pitchfork that's done such an amazing job for well over a year. So far today, continuation higher over the April 2017 low at 105.68, but as yet not testing the middle time. Cable, aka sterling against the US dollar. Another indecisive spinning top on Friday, the third consecutive one, this time with a larger tongue on top instead of a long tail. The open and close remain roughly the same as the previous sessions, just over the June 2020 low at 122.48. Overhead, we still have the upper time, currently at 123.35, of the late April to late May bearish shift pitchfork. This time helped again by the falling short moving average, currently at 123.35, and paralleled by the short medium moving average, a little higher up, currently at 125.09. Seems the market continues waiting, though for the life of me, I still don't know why. As under the May 2020 low at 120.73, there is little support bar the middle time, that's currently at 119.96. Maybe it still is the previously mentioned enormity of the empty space below the May 2020 low that's worrying this market. Recently I've put forward the idea that the action since late April to date is a type of bearish halfway hesitation. Doesn't look very much like that anymore, but I'll still keep it now for an initial target X in the 117.5 area if this pattern develops. Finally, there is the possibility, and I only noticed it really today, the possible construction underway for a possible diamond pattern. It's early yet, but I thought you should know. And so far today, a cautionary move higher to test the combination of the upper time and the falling short moving average. But beyond this, we have the resistance at 124.06 and 124.36, but better should show up between 124.78 and 125.09. which has the 38.2% Fibonacci line of the March 20, June 21 move in between at 124.89. Euro sterling, an immediate countering bullish double and a possible hammer as well on Friday. This after the previous session's reactionary bearish double, which very nearly became a key reversal down but didn't quite make it. The most interesting feature was the close up over the short late May to date upper trend line, currently at 85.95. This short trend line has seen action above it, but only now only three single separate closes. Hence you can view it as being breached rather than broken, despite the large size of one of the breaches. And below is the neckline, currently 85.71 of the December 21 to May 22 reverse head and shoulders pattern. This neckline is the extension of the upper rising trend line of the original and extended diamond pattern. Hence moves above and below it are important. Friday's action pierced it and the nearby short moving average, currently 85.69, but did no more than that. Just below Friday's low and the neckline, we have the mid-April to date uptrend, currently at 85.51, which had previously been a base of action prior to what we've seen today. Or yesterday actually, on Friday. Prior to the recent pipe top, we still had the following targets on the upside. With a smaller lopsided diamond pattern, we had a primary target X in the 86.80 area and harder to get secondary target X1 in the 87.65 area. For the extended diamond pattern, we had a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Okay, for those two diamond patterns, both primary targets X in the 86.80 area and target X2 in the 87.15 area had been achieved. There are two additional items to discuss. There is the previously discussed a big one, which had been triggered, but then the market started sending mixed messages. I've spoken for months now of the very large falling wedge pattern, currently 84.45 to 81.26. This pattern is still in operation, but it has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some serious questions. You see, it has the most ambitious upside target of all of them. Target X4 for this pattern is now in the 88.65 area, and that is a really big ask. More recently, we've seen action at the previously mentioned neckline, currently 85.71, of December 21 to May 22 reverse head and shoulders pattern. This support is also the extension of the rising upper trend line, the original and extended diamond pattern. The primary target X5 for this reverse head and shoulders would be in the 87.75 area, and a secondary target X6 would be in the 88.60 area. That's always harder to get the secondary target. The targets X4 and X6 are currently just off the top of my daily chart. So far today, dip below the short May to date trend line, almost but not quite down to the neckline before a pull back up to the recent trend line again. US dollar against the Indian rupee. An immediate countering bullish double on Friday with the highest close, ever. Additionally, the market made a weekly key reversal up, right at the top of the market. Prices opened a little higher, but then dropped down to gather support from the breach, but still formidable lower time, currently 78.15, of the mid-January to mid-April bullish Andrews pitchfork. A little lower, we have the broken lower trend line, the rising ascending triangle. That's currently at 78.10. And finally, a little lower still, the middle time, currently at 77.92 of the bullish shift pitchfork, the same move as the Andrews pitchfork. This last support is just over the interesting recent congestion at 77.89. Now, meanwhile, above, we have the old target X in the 78.30 area. This was the target for the whole of the 22 action being a ragged bullish halfway hesitation, as well as the upper trend line, currently 78.61, which, to be honest, looks weak, but is from the October to December 21 move. So far today, a higher open for drop down almost to the lower time, but backing up higher again and seemingly contemplating the all-time high at 78.39. US dollar against the Brazilian real. A higher but indecisive doji cross on Friday, as it spent a lot of its time over the middle time, currently 524.57 of the April to late June bullish Andrews pitchfork, as well as over the flatlining long moving average, currently at 524.89. However, prices still closed below the long moving average and barely over the middle time. The base of the action was on the Fibonacci congestion at 520.27, and interestingly, the 50% Fibonacci on the March 21 to April 22 move at 522.76 played little actually on a closing basis for a second session now. This all was still a step closer towards target X on the upside at 528.45. This is a target for the start of April bullish halfway hesitation. It's not a perfect one, but it's still there. Beyond target X, we have congestion at 534.23. US dollar against the Mexican peso. A sixth bearish black crow on Friday and a continuing superb follow-on low to the recent counter-to-counter bearish dark cloud cover pattern and bearish open and close black Maribosa. This time the market saw support from the combination of the middle time, currently 20.0082 of the April 21 to March 22 bearish shift pitchfork, and a flatlining short medium moving average, currently at 20.0224. Give way, and prices dropped to finish just below the broken upper time of the busted bearish Andrews pitchfork, for the same move as the bearish shift pitchfork. Now, I previously suspected this may not be that much of a support, and we would likely need to look down at the April lows at 1971.68 as the next support. Further overhead, we have the declining medium moving average, currently 20.1844, and the more powerful flatlining long moving average, currently 20.4147. So far today, a slightly higher open and piercing of the broken upper tine again, but this time from below. However, the move higher has not gotten far, and prices have dropped back under this broken upper tine, but not really tried to move much lower as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights are AD Tofpik and ADM Investors International Limited. And here comes the final bit.